Let's be honest, I almost ate shit this last week. I mean, blew myself up. Not actually, but I would have had some pretty substantial losses off my account if I didn't make the quick pivots that I did. So let's talk about what happened this past week, what it means about this upcoming week, and probably the upcoming next few weeks, because it's really important. You're gonna want to pay attention to this video. So the week started out really good last week. Then we had Thursday. Thursday was my first bad day, first red day of the year so far. We had this fake out on the 1 hour. Looked like the RSI wanted to have an SMA cross. We saw the TTM rolling over on several different time frames, and then it completely reverses. We see the explosive move up. I start going through all my watch lists. I see that lots of stocks are set up for turnarounds. It looked like they want to explode higher. I called out a bunch of names. Then I saw the futures market also going crazy, and I had already told members on Thursday night I'm looking to get out of the SPY puts. And then looking at that futures movement, looking at the way that the flows were going for Friday on the open, I got out even sooner than I had expected for my SPY puts. I cut them all. If you watched last week's report, this wasn't out of the realm of possibility. And keep in mind here, if we do get a breakout, I'm going to have to cut that position, take the L, and look for re-entry. And I'm going to want to see ample confirmation right there. I don't want to get faked out on, a breakout of 480. We might even have a touch and go before we actually get the downside move. It's not out of the cards, especially in a market like this that doesn't really want to melt down. Now, despite that, I didn't stop being short on the market. Instead, I changed my exposure. And we talked about this on the weekly report. The market can go to new highs and still technically be in a secular bear market. And when I see things like the 10 and 2 years start to flatten out, which is usually the start of a recession, when the market starts to turn over, or the fact that over 60% of US states are now technically already in a recession, I want some downside exposure. So what I did is I actually pivoted to VIX calls. Last week, we talked a lot about VIX calls. If you haven't seen last week's report, go watch that. We went in depth. I'm not going to do that on this video. And we can see that as the SPY is melting up to new highs, VIX hasn't gone to new lows. It's actually stayed pretty sturdy. And as we look at the implied volatility in the market, we can see that it's continuing to tick up higher now at 8%. Remember, at the end of last year, this was what, 1%. And that's what I was saying. I'm buying up all these puts. This is crazy. This is a great opportunity. And we made a bunch of money. But as we see this to continue to tick higher, remember that this causes some loosening up in the market. This creates an environment where you could get those big downside plunges, and I don't think we're out of the weeds yet. I still think we're in a bit of a danger zone. This could mean that the market continues to melt up. In fact, I'm expecting a lot of FOMO into this week, and one of those was actually Tesla. Tesla was one of the names that I shared in the Discord. I thought we had a very interesting pattern set up right here. I think we're completing an A wave. I'm expecting a B wave to the upside. It was important on Friday that we hold this 209.57 mark. Okay, if we close below that and validates the chart, this could go lower. We got an intraday move below that, and it looked scary, but Tesla ended up recovering into the close. So I think this week we're actually set up for a nice move to the upside into earnings. I'm still going to play a strangle. I don't want to hold naked calls into earnings. I will play the strangle. And in fact, I expect that likely I'll probably make money on both ends for that strangle, as premiums tend to run up quite a bit into Tesla's earnings. And speaking of Friday, shout out to anyone that caught SMCI. I was kicking myself on this one. When my alert went off, I was managing all those positions. My emotions were a little bit kerfuffled. 50% of trading is your emotions, right? If by the time I cash this, it's already up 30 bucks, do I really want to chase that when I'm already kind of teetering? I have a bunch of positions that I also was chasing as well. I set up the Tesla calls. I tried to chase TSM afterwards for sentiment. I was in Meta looking for a new top there. We ended up getting a lot of those. A lot of those played out. I think we were 4 for 4 actually for trades on Friday. But this was the one that got away. And you have to control your emotions, right? Do I want to chase this after I already missed my alert? After it's already up big? No, not really. Just because to keep my emotions in line, it doesn't feel very good to watch it continue to run up, but I don't want to try and revenge trade it to try and squeeze out some profits when most of the money has already been made. But if you played this, you got 500%. So if you caught that call out in the Discord, you set the alert, for the target that I was looking for. Good job on that one. And when I'm talking about controlling emotions, I feel like a lot of people think you just don't get emotional, but that's not the case, right? Even Buddhist monks get emotional. The point is that you recognize the emotion, you recognize that you feel that way, and then you let it go. You let it flow through you. The quicker you process those and you let them go, the quicker you can act like a robot. There will always be more opportunities on the market. It's okay if you miss one. And speaking of opportunities, one of my favorite long positions for this year, Celsius energy drinks, got clapped on Friday. The main bit of news was a downgrade from Bank of America. However, it's important to note that they also still maintained a $65 price target on the stock, which is now at $52, was not even at $65 when this report came out. Bank of America claims that Celsius is going to lose market share. And honestly, I think this is laughable. This was a fundamental play with lots of time. I'm not concerned about it. I think the fundamentals here are great. One of the major catalysts for February was the partnership with Pepsi that was going to give them international distribution. This company is outpacing every other energy drink company in growth. To think they would lose market share with stats like that is unbelievable. It's the number one seller on Amazon, the number one seller at Costco. They're literally ranked number 3 in the US, right behind Monster and Red Bull, set up to totally disrupt this duopoly. And until any of those facts change, and not just some random analyst opinion, but actual data changes, I remain bullish on Celsius, and I'm looking at this as an opportunity to start averaging into my positions. And speaking of averaging, I'm keeping a close eye on uranium. 30 was one of my target levels. I don't think we're done with the sell-off yet. I think I want to see this come back to 28 and then look to probably get bullish there, or at least reevaluate how this is looking for the sector. IWM, which is your Russell 2000, is another one we got to talk about. These small cap companies are not participating in this greater rally. This is another warning sign. I hope you're paying attention. However, what also looks interesting is the fact that on this monthly chart, keep in mind, look at the dates at the bottom here. Okay, we're looking at a monthly chart. This is not a short-term chart, right? We are seeing a very interesting setup that we've seen many times before on the Russell 2000. So even though I'm bearish, like the next month or two, maybe coming into March, I'll continue to be bearish. In the future, I'm going to be very bullish. I'll be looking for that election year rally, and I'll be looking for these smaller companies to start participating. Hey, this will be really good for Celsius as well. It's one of those. And this significant pullback, then pump, pullback, then pump, pullback, pump could be coming this year for IWM. We're seeing the RSI all have the same similar setup when our TTM on the monthly starts to fire. This looks exciting for this year, but not quite yet. Patience will be paid. Trust me. Now let's talk about TLT. TLT is at a really interesting spot right here. We have a touch on your 0.328. And this might want to rally. However, I do kind of want to be patient because remember, we're going to get an interest rate decision at the end of January. Some people are even expecting that to be a rate cut. Hello, there's not going to be a rate cut with the S&P at all-time highs. And with inflation slowly ticking up. Actually, if you look at prices for food, they're at all-time highs. Now, that's not calculated into your core inflation data, but it should be worrisome to anyone who's expecting a cut right now, especially because the Fed knows that the wealth effect is a real thing. Market at all-time highs makes people feel like they're rich. They look at their stock portfolio, they think that they're set, and then that causes them to spend more, which means demand stays high, which means inflation could be structural and come back. And it's I mean, we're really, if the economy continues to be strong, there is no recession this year. This year turns out to be a huge like gaslighting event like 2023 was, where all year long people are looking for the recession. It doesn't come. And hey, I was part of that crew, I'm not gonna lie. But I think that this could be no rate cuts at all, and TLT could trade sideways. I mean, this is not playing out how I expected, and I want to follow the chart here. I still think that due to the way the mechanics within TLT could cause us to still make some money here, I'm still just going to be patient on this. I actually want to see if our weekly RSI wants to come down and maybe meet this SMA, get a bounce up. We can see that the weekly is still holding up strong, but with this RSI melting down, and it's, in bearish territory below 50, it's making me a little bit worried. I wonder if we'll see a pullback maybe down to 89, and then I'll buy some. I did buy a little bit because this is a significant level right here, and I think we're getting a small ABC pattern to the upside. So I'll speculate a little bit, and I'm stepping lightly. Now let's talk about a play that I got set up right now. I am short on MicroStrategy MSTR. I tweeted about it, and already some people are commenting on this saying, what are you talking about? They still hold all that Bitcoin. Remember, folks, they hold Bitcoin on their balance sheet. This is a declining business that bought a bunch of Bitcoin on loans at higher interest rates. It's more expensive for them to hold that. And when we actually even look at how Bitcoin is performing, it's declining. And I think it's going to go down further. I said I would likely start buying this if it got below 40. We saw a touch at 40 before it tried to bounce a little bit. This is still looking bearish on longer time frames. And this company looks like a falling knife. With all these ETF products, who on earth is going to buy this? We've seen them go from $1,300 down to $150. Now we're back all the way up to $700. We're dropping down again. Shout out to one of our members who already caught a bunch of this move, made some great profits, but we're just now getting the turnover on the weekly. The weekly is starting to drop into a bearish RSI, and I think we're headed much further down for this company. In fact, I think this will eventually reach a point where Bitcoin will continue to rally higher, and they will likely hang down here at the lows where they belong, because this should not have persisted as long as it has, and these other products are going to compete away all the shareholders here. And this video is getting too long, so I got to wrap up the weekly report. I got to do right up in the Discord now on some plays and opportunities that I think are setting up for the upcoming week. I think there's going to be a lot of FOMO this week. Retail's going to pour in, and with the implied volatility also rising, I think we're going to see some pretty big swings in the intraday, which is going to make day trading really appealing. This could be a really great week. I'm going to make sure that I don't have more days like Thursday, because that was not fun. I'll see you on the next week report, or I'll talk to you tonight in the Discord. By the way, it's Sunday. We've been trading futures as well, live in the chat with some members as well. So we might be doing that if you want to head over there and say hi.